Welcome to the third recording in relation to process costing. Here we're going to be looking at multiple processes. So far we've considered a single process, which implies that when we input our material, labour and overheads, it then requires one process and the output at the end of the process is our completed product. However, in reality, products may go through several stages until they reach completion. If we think about the chocolate, our first process could be the production of the milk chocolate, but then the second process could be the addition of maybe some of the fillings to the chocolate, or if you're producing a fruit and nut bar, it could be the addition of the fruit and nuts. So the output from the first process, which is the milk chocolate, goes into a second process where fruit and nut are added, and then the output from the second process is the completed fruit and nut chocolate. So we're going to look at how we can record that within the process accounts. So here we have an example, multiple process costing. So the first process requires input of 1,000 kilos of material. There's an expected normal loss of 10%. Our material costs are £10,000. Labour and overheads 5,020. Actual output 880. And the losses are sold at £8. You may recognise these figures from the previous recording. They're the ones that we used for the single process example. And we're using these same figures again, but now what we're saying is that our output from the first process is not complete. It goes into process 2. What then happens is we have some additional costs and input for process 2. We add some more material. There is some more labour involved, and there are more overheads incurred. Process 2 is different to process 1. The normal losses for process 2, 5%, and we can sell our losses for £3. And our completed output 1,250 kilos. So we consider one process at a time. So we would start off with process 1. We would complete the physical flow. Then we would use the formulae to work out the cost per unit. Then we would value everything on the right-hand side of the physical flow, and then we would draw up the process account. I'm not going to go through that again because it is exactly as we did on the previous recording number 2, single process, and you can refer back to that if you wish. But what we end up with is the T account for process 1. So here's our process costs, 1,000 kilos, £15,020, our output, normal loss and abnormal loss. So you've seen how this process 1 account is prepared. As I said, it's what we did on recording 2. However, in this example, what we're saying is that this output is not complete. It needs to go into a second process where we add some additional materials. There's some more labour involved and there's some more overheads. So we need a process 2 account. We need to go through exactly the same steps as we did for process 1. So we start off with the physical flow. So physical flow is the input equal to output plus normal loss plus an abnormal loss, or if there was a gain, minus an abnormal gain. Now the input from process 2 is the output from process 1. Remember, the physical flow, we're just looking at the quantities. So what did we get from process 1? 880 kilos. So we put that into process 2. But what we're told is that for process 2 we add some additional material, another 520. So our input for process 2 is 1400 kilos. Bear in mind what I said about looking at the normal loss first when you're filling in the right hand side of the equal sign. Normal loss, 5% of input. So 5% of 1400 is 70. Our completed output was 1250. So we can write that in. If that adds up to 1400, there's no abnormal losses. However, it doesn't add up to 1400, it adds up to 1320. So that tells us there's an abnormal loss of 80. So there's the physical flow. So the main thing to remember there is that we must pick up the output from process 1 and then add to that any additional materials. So that's step 1. We then need to work out the cost per unit. Okay, so it's equal to our process costs minus the scrap value of the normal loss and we divide it by the expected output. So what are our process costs? So remember, your process costs are the costs of your input. We input 880 kilos. They came from process 1 at a cost of 13,904. So we've got 13,904. That's from process 1. Our additional costs within process 2 are the £1,500 of material, the £1,800 of labour, and the £2,000 of overheads. In total, 19,204. So that's our process costs. So again, it's remembering to pick up the costs from process 1 and adding them to your additional costs in process 2. So we deduct the scrap value of our normal loss. So we know our normal loss is 70, and we were told that we could sell these losses for £3. So with 70 times 3. Divide by the expected output. So our expected output is what we put into the process. So look back at our physical flow. We input 1400. We expected to lose 70. That's our normal loss. So we would expect our output to be 1330. And that gives us £14.29 per kilo. So that's our cost per unit. Step number 3 is to complete the valuation. We are valuing everything on the right-hand side of the equal sign. On the right-hand side of the equal sign, we have our output of 1250, normal loss of 70, abnormal loss of 80. So output 1250, normal loss 70, abnormal loss 80. We know we're using £14.29, so our output 17851. Normal loss, remember, 0 or scrap value. We can sell it for scrap. So that's 210. And abnormal loss, £14.29. So there's our valuations. So the last thing to do, now that we've done our workings, is to put it all into process 2 account. Okay. Not quite a straight line, but never mind, you'll get the idea. Remember 2 columns, kilos and value, kilos and value. So what went into this process? Well, if we look back at our physical flow, there was the 880 and the 520. So the 880 came from process 1, and then there was the additional material, which was 520. The costs that goes with those, the 880 kilos that came from process 1. We look back up at our process 1 account, 13,904. Our additional materials, 1,500. So 13,904 and 1,500. Also for process 2, there was this additional labour and the overheads. So we need the additional labour of 1,800 and the additional overheads of 2,000. So that's what we needed to produce our product. So if we now look at the credit side of the account, so if we look at what we valued, we know that what came out of the process was 1250 kilos, and we valued that at 17851. We know there was a normal loss, which was 70 kilos at a value of 210. And finally, we know there was an abnormal loss of 80 kilos at 1143. So we'll know if we've got everything correct by balancing off, and both sides of our account should add up to the same amount. So if we add up the kilos on the debit side, they come to 1400. If we add up the kilos on the credit side, they also come to 1400. If we look at the values, add up the debit values, they come to 19204. Add up the credit values, 19204. So everything balances off. What's gone into the process has been accounted for within what's come out of the process, whether it be the output, a normal loss, or an abnormal loss. So that's a multiple process account. And we could see that process 2 output could in fact go into a third process or a fourth process. However, you'll only generally be asked to deal with 2 processes. So the method is the same as for a single process, the difference being that we need to remember to take our output from process 1 and include it in our input for process 2. And then we proceed the same as a single process account. So that finishes this recording that explains your multiple processing. What you may find when you attempt some questions yourself is that when you write up the process account, your value columns, your balances in terms of values may not agree exactly. There may just be a few pound difference between them. This is due to rounding. When you work out your cost per unit, in this example 1429, if we need to keep that to 2 decimal places, so you will be applying normal rounding rules to get a cost per unit to 2 decimal places, which you will then use. However, because of that rounding, it can mean that when you complete your process account, the value on the credit side and the value on the debit side in terms of totals may not agree. That is perfectly acceptable. Right, so that's the end of this recording. I hope you found it useful and you can now tackle some multiple process costing questions.